Hello, I'm Steve Ehrlich, Forbes Director of Digital Asset Research, and I'm here today at Forbes Talks to talk with Nina Bambysheva, staff writer at Forbes on the digital asset team, on everything that's happening right now in crypto and the broader economy. Hi, Nina.
Hi, Steve. Great to be with you.
So what's going on? As we were going to bed last night, the market started crashing overnight, especially once the Asian trading hour started and into the morning. Bitcoin briefly fell below $50,000, I think at least twice, although it started to recover. What's happening?
Right. We're seeing sell-off across various assets, not just crypto stocks, of course. And with crypto specifically, a lot of it is macro driven, but there are also some undercurrents related specifically to the markets and the latest liquidations that we've seen kind of throughout the summer. Um, Everyone is talking about the carry trade, of course, with how traders were borrowing yen at low rates and investing into dollar and other foreign assets, and how this trade is unraveling, and that is forcing traders across markets to liquidate. In crypto specifically, overnight we saw over 800 million leveraged positions liquidated, more than 300 million in DeFi positions wiped out. So yeah, we're quite not over that.
Yeah, it seems like crypto very much is a tinderbox and loves to take on levered positions, which basically means you borrow money to make bets worth more than the value of the capital that you're putting on. And I think this really sort of speaks again to in some ways the immaturity of Bitcoin. It's supposed to be a safe haven asset. It's supposed to be the asset if its value proposition, as it's stated by uh, uh, believers is true, it should be one that investors rush to during times of stress, like gold, like the dollar. But that's not actually what's happening here. I mean, again, it seems like Bitcoin is trading along the lines of the tech stocks, the Magnificent Seven, which are continuing to decline. And to me, it still seems like it shows some of the immaturity of the asset class, and Bitcoin in particular, despite the fact that now we've had spot ETFs trading for a number of months. We had former President Trump address a gathering of thousands at a prominent crypto conference, and has even, I think, somewhat jocularly suggested paying off the national debt with Bitcoin. So he's embracing it and making it a campaign issue. So I think in some ways this is a nice reminder that this asset class is still very new.
Yeah, right. And also institutionalization of Bitcoin is a double-edged sword. While everyone welcomed the launch of ETFs, that also means that it's something that more people can sell when the environment changes as to what we're seeing today. But it's also interesting to note what is happening with Ether specifically, because it lost quite more than a lot of other major tokens. I think it's at 25% down since yesterday. And there is another important factor playing out here, which is Jump Crypto, formerly a large market maker, liquidating their positions across exchanges. They have moved over 200 million, if I'm not mistaken, to different exchanges throughout the past few days. And there's a lot of talk about them unraveling more over the next few days.
Yeah, Ether's a really interesting case because the spot ETFs just launched, as you mentioned. I guess it was 2 weeks ago or so, very late July. More than a billion or so has flowed in, but I think the net flows have actually been negative because of outflows from Grayscale's legacy product, which has excessively high fees, at least in comparison to the rest of the market. But as you rightly point out, Ether is down disproportionately higher or more than the rest of like the large scale cryptos. I mean, Bitcoin, BNB, Solana is actually somewhat even in the last 24 hours, which is pretty good for Solana's point of view. And this is one of those cases where I think we have to talk about the macro backdrop. I mean, you mentioned a lot of these issues really started with Japan. The country has been plagued, I think, for decades at this point, in a sort of a disinflationary, deflationary spiral, and the government has been trying to find ways to increase inflation so that it can kind of stimulate the economy a little bit. The Bank of Japan was kind of caught in between Scylla and Charybdis and decided that they wanted to raise rates to try to increase purchasing power for its citizens, but that kind of hurt the export economy, and that's reverberating around the entire world. The carry trade you mentioned, where like the Japanese yen, which was trading at such low interest rates, negative interest rates for a while, it was very popular to borrow that currency and then buy more speculative currencies like the peso or other assets. It seemed like a pretty risk-free trade. All that's now being called in, and the topics, the broad Japan-based index is down, I think 12% or so, one of its worst days ever. The VIX is having one of its worst days ever as well. That the fear gauge. So all of that's happening, but then it kind of aligns with these more like insular or esoteric trends within crypto. Before we started recording, Nina, I mean, you were talking to me about some of the big sales that have happened. The German government liquidating 2 billion, Mt. Gox distributions now starting. On the Ethereum point of view, the Ether perspective, there's also at tens of millions of dollars worth of Ether is being transferred from Jump Crypto to exchanges, which signals, I guess, either one of two things based on reporting that we've seen. Either they're actually exiting the crypto business altogether, the crypto market making business. I mean, very famously, they were closely entwined with Terra Luna, the stablecoin, multi tens of billions of dollars stablecoin ecosystem that blew up, and the CEO of Jump Crypto recently left. So there's questions about that. Are they just liquidating and moving out of the business, or are they using these funds to cover margin calls? That's certain reporting that I've seen. So there's lots of these big ticket sales that once they hit the market, market depth is not necessarily able to digest them. And that has a cascading series of liquidations, so people have to unwind positions. And crypto is not an ecosystem that's able to do that in a very calm way.
Right. And just to add a little bit to what you said, the CFTC is also reportedly probing Jump Crypto. So an exit of such a large market maker is obviously something very significant to the market. Some of those liquidations related to German government selling the Bitcoin they seized earlier in the year from a defunct movie piracy website and Mt. Gox distributions. I think those are not so relevant today because we've kind of been seeing that over the summer. And that may be somewhat a good sign to those who are following the crypto markets, because we've now seen such significant pressure from both endogenous events and exogenous, and the market seems to recovering in the past few hours a little bit. What do you expect to happen over the next few days? What are you looking out for?
Yeah, that's a good question, because I know we've been trying to put some of this in historical context. I mean, for people like you and me, we've been through several cycles or several days like this. I mean, one that really kind of springs to mind is March 16th, 2020, sort of Black Thursday, when I mean, I think Bitcoin dropped below $5,000, and the market, I mean, everything was basically converging on the dollar. I mean, that's when we were very much in the throes of the pandemic, and there were real fears of kind of how the global economy was going to move forward. I mean, this was a once in 100-year event that was transpiring. But again, like the market, especially by May, it started coming back. In crypto, though, we do know what happens. I mean, ultimately, Bitcoin jumped back, but by November, excuse me, actually, it came back. But then over the next couple of years, we started seeing the market go down again with the collapse of Three Arrows Capital, Terra Luna in 2022, FTX, and so on and so forth. So I do think once all of this shakes out a little bit, we are going to see this bounce. Now, it depends. Are we looking at a dead cat bounce, or is this going to be a real recovery? I think the ferocity of this crash lends us to expect a bit of a quick recovery. But then the real question becomes, are there any big market makers, any big players that were disproportionately bet somewhere that they're going to get wiped out, and then that's going to lead to more cascading types of events like we saw in 2022. The good news is most lending desks they're not nearly where they were before. Open interest is not nearly where it was before in the crypto space. So hopefully there's not going to be that same type of collateral damage. But that's what I'm really looking for, because financial crashes, I mean, maybe like 1987, notwithstanding, tend to not just happen in one day. It's sort of a series of events. The Great Depression, we always talk about that day in October, but it actually happened over the course of months. The crypto come down in 2022, it took months and cascading events to happen. Here, I think we're still in a bit of a wait and see mode. And again, the hope is that the industry learns the lessons from 2022. It's not quite as entangled as it was before, and there's more transparency and more resiliency. So that's really what I'm looking to see. But in the meantime, I mean, what I expect investors to do is really focus on blue chip assets, at least in terms of where crypto, where there's a lot of activity, developmental activity, stability, center. I mean, that's going to be Bitcoin and Ether and Solana and so on and so forth. And maybe some of these edge assets, the meme coins, or some of these new novel restaking tokens and so on and so forth. Those are ones that might take a little bit longer to recover, because those tend to have much thinner markets. People use leverage to bet on them, and holdings tend to be concentrated in fewer people. The other hope too, again, I would imagine the ETFs. It was just a couple of days ago where Bitcoin was at $70,000. I mean, that coincided with Trump's big speech in front of the conference. Obviously now, I mean, at $54,000, it's down, I don't know, 20-ish%. I mean, that's a much more attractive entry point for people. And I know Morgan Stanley was reported to just start enabling some of its clients to, I think, get access to the BlackRock and Fidelity ETF. So this could be an attractive entry point to kind of climb back up. The other thing to keep in mind too is I think August tends to be a pretty poor month, at least in terms of crypto. I think over the last like 13 August or something, I saw a statistic that 8 were negative, and the average more than double-digit reversal during those periods of time. So all that's happening here. But I think, assuming that there's not going to be news of some big major wipeout, so on and so forth, that's good for crypto. Then the big question becomes, what's going to happen next with the Fed and the broader economy? Because there has been this hope, this expectation. I've actually said multiple times, and I've written too, I think a misplaced expectation that the Fed's going to be able to kind of land this plane and deliver a soft landing for the economy that we were all hoping to. Obviously, this underwhelming jobs report on Friday scared a lot of people and made us think that the economy, at least the U.S. economy, is much closer to a recession than perhaps we were hoping, and where the U.S. goes, the world tends to follow. So it's really interesting to see what will happen. The Fed decided to keep rates steady at its FOMC meeting last week. They do not meet this week they don't meet this month in August. They will be meeting at the end of September, and it seems like, at least according to the CME FedWatch tool, there's growing expectations of a 50 basis point reduction, with perhaps one or two more later in the year, maybe a 125 bips reduction between now and the end of the year. That would be pretty strong. And there's even some talk about the Fed intervening and not waiting till September to reduce rates. To me, that would be a mistake, because that would signal panic to the markets. But who knows what's going to happen next? I'm curious if you have any thoughts on this.
Right. No, I also recently checked the FedWatch, and certainly the expectations seem to remain quite high that we'll see a rate cut in September. But also, it's I'm curious about what's going to happen to altcoins. A few sources are saying that we'll never see, a lot of them will never see the all-time highs they've had this past cycle. I think since Friday, market cap of altcoins has dropped by more than 50 billion, which is quite significant. Also, how it is going to continue to affect DeFi, especially with Gem Crypto continuing to liquidate their positions. So quite a lot to watch out for. Yeah, but as always, yeah, we're here to help our readers and listeners to navigate this.
Yeah, it's a good point about DeFi in particular, because these are the times when DeFi protocols really matter. For anyone that doesn't know the term, DeFi stands for decentralized finance, basically exchanges, crypto exchanges that exist as software programs running on top of various blockchains that anyone can interact with. And again, through all these liquidations, these DeFi platforms, these exchanges that we're seeing, as far as I can tell, none have crashed, none have really experienced problems, even though more traditional exchanges have had to implement circuit breakers and halt trading because of the ferocity of some of the sales. So that's pretty interesting. But yeah, I'm with you too, and I am curious to see, Nina, if any of these more edge assets, these meme coins, some of these altcoins. I mean, you and I, along with one of our colleagues, published a pretty interesting investigation in March where we detailed 20 layer one blockchain tokens worth at least $1 billion in market cap that we dubbed zombies. I'm going to be interested to see how they're continuing to perform during periods like this, because our assertion in that investigation was that their market caps were pretty much inflated just by traders and not by actual users. Are they going to be disproportionately hurt? And the same again will go for other assets that just have less involved, less enthusiastic or more narrow community groups. So with that, Nina, thank you for joining us. Thank you to everybody for listening. And we're going to be continuing to follow the news here. Please follow us on Twitter. I'm at Steven_Ehrlich. Nina's at N Bambysheva. You can always reach us at Forbes Digital Assets. And have a great rest of the day. Thank you.